Today is Wednesday, 17th of January 2018. Dow Jones 30 Index recap for Tuesday's session. So Dow Jones came back off holiday from Monday and opened up with about 200-point gap up from the previous close, and at one point it was up 280 points. I sent out a warning to people and a confirmation of taking a short position, which was a high risk, because these things are never confirmed. Even though there's gaps, it could have not backfilled the gap. So even though I sent out a trade update on a short position, I emphasized to maintain discipline with a tight stop if the trade went against you. So I took a short position myself. Upon that, after I started on the shorter time frames, I started to see the price movement break down. We can see here. I'll just delete that. Here, if I highlight this, the importance of what we call tweezer top. And what that is the identical highs or lows of the previous candle, and that, as we can see here, we had two identical highs. So if I mark in a horizontal line, we can see that, and that gave confirmation. The stop was if on this candle, if it failed and broke above that previous high, the candle on the 4 hour of 26.87, you close out. But as we can see, we had a big intraday reversal. One point it was near 300 points. So congratulations to those who took the trade, the short position, and closed out like so I did myself. I'm not confident of holding short positions overnight on the Dow Jones as of yet, given that the trend is still pretty strong. So the best way I see it is to intraday trade this. In saying that, on the 4 hour, we may have developing a bearish ABCD pattern. So what we could maybe see is we've had a major move down. During the futures, we've had some corrective candles. If the price action on the Dow Jones starts to break down again, we could get a measured move from the top to the bottom here. I'll copy that to there, which would give us 25,510. If we put in a Fibonacci measurement on this swing, it puts us around the 161 as well. As we know, as I noted with the ASX, institutions like to set on the extensions, they like to set these targets to the 161. It seems to work quite well. So I'm confident if we do get this pattern starting to play out, we may very well see that get hit. Maybe not tonight's session, may take over more than one session to do so, but we could very well get that. Secondly, if we put in a Fibonacci move from here, from this swing low to high, we've had a rejection of the 23 at the moment. So if we go back to daily chart, we know the price has broken through that 50 Fibonacci fan angle. I highly doubt it's going to test the 38. It looks like it wants to come back and test the 50, and when it does, have to watch that to see if it holds. If it doesn't hold and breaks through like it did here, depending on the acceleration, it could actually be quite steep, and this may be a start of a correction where it goes back and tests the 61.8. But that's too early to call at the moment. We'll have to wait and see. Now, if we just quickly take a look at our monthly chart, I noticed this very important Gann timing angle. Now, currently at the moment, it is above it. That angle sits at, depending on the month of January, that angle sits at 25,740. Now, we know if we go back to our 4-hour chart, that if this bearish pattern does play out, and we get a hit around 25,500 area, that puts us below, moves the candle back below that Gann timing angle, which I feel is very important. But obviously, we're just halfway through the month, so we still have quite a few trading days, so it could very well maybe want to hold this angle. But I'll be very interested to see if it does fall below and closes out the month below that. That could very well signal the top of this market. Now, a few things we look at. If we measure this timing angle over time, from that high, we have 17 years and 11 months. We'll measure it again from the second high. We have 10 years and 3 months. More importantly, from the second high of October 2007, of 10 years, 7 months, it's a very, very important time cycle, because it's just over a third of Gann's master time factor of 30. So I'm finding this quite interesting, that this could very well mark the top. Always we have to wait confirmation to see if that plays out. But it could be time to maybe start considering to short the Dow Jones index.